Good to have you guys here today. Hope everybody's doing wonderful, feeling good, ready to learn some stuff. Man, I do love donut and a coffee, Ron. Good morning, Steve. Great to have you. Guys, you ready? We're going to do this today. It's going to be a good one. I feel it. Feel it in my bones. It's going to be a great day. Good afternoon, Miss Jen. Yeah, I've got a couple of you that are good morning and a couple of you that are good afternoon. I like that. Little variety across the board. Guys, news today, 8:30 a.m. Was anybody watching? That was a pretty big spike. If you were in a position, that was probably enough to yank you right out of it. So one of the things I do each and every morning, just part of my morning routine, guys, is I'm going to come through and I'm going to check news and see if there's anything going on. Hey, good morning, Ollie Hader. Good to see you again here. I like it. Got a donut from that side, too. At 8:30 a.m., guys, we had 3 of these red boxes and 1 orange box. And I don't care what the news is. It doesn't matter to me what core CPI is, what the Empire State Manufacturing Index is. What's important to me is that anytime there is a high-impact news release, it can upset the apple cart. It can make things very difficult to trade. It can make the market bounce and spike and do all the things that we don't want the market to do. And if you were watching this morning on TradingView, that's a 1-minute bar, and that's a 15-minute bar. And all of this went down instantly when that news released. So it just creates an advantage knowing when it is. And this is just a big part of my morning routine. Um, I know I've got some newer people in here. I wanted to make sure that we're clear. This is an education room. I do not call trades. I do not tell you when to enter the market. I don't tell you when to exit the market. But what I will do is I will teach you how to read these indicators, guys. I will teach you to recognize advantages so that you can take advantages and turn them into trades, guys. So we're laying this foundation in this classroom every day. And it's very much the idea that repetition creates recognition, that when you see something multiple times, when you do something multiple times, and most importantly, when you have a recipe to find success, you can stick to it, you can adhere to it, and you can find that success. So we're going to talk about 3 concepts every morning, guys. We're going to talk about momentum until we're blue in the face. We're going to talk about recognizing whether or not you have a clear path. And then entry area initially is going to be defined for what we call a high probability trend trade, guys. And this right here, a trade is momentum, clear path, in an entry area. It really is pretty universal, but you're going to learn to recognize them through a trade that we call the high probability trend trade. And this is a trade that typically wins 70 to 80% of the time when you learn to follow the rules. This is a trade that creates an enormous amount of confidence through that success, because they say success is the byproduct, or what is it? Confidence is the byproduct of success. And my hope and goal for you is that you'll be able to look at a chart and say to yourself, I have everything I need to call this a high probability trend trade. I can't wait to take this entry. This is a trade that's more likely to win than it is to lose. And then because you're learning to speak in terms of advantages and not monetary, right? You're not going into a trade saying, I'm going to make $500. You're going into a trade saying, I have an edge. I have an advantage. I don't know what the result's going to be, but this recipe wins more than it loses. Guys, when you begin to alter the recipe, when you lose one of your advantages, it puts you into what we call a medium probability scenario. If you decide you're okay with giving up 2 of your advantages, it puts you in a low probability scenario. So every time we look at a chart today, guys, we're going to discuss these 3 concepts. Every time you post in the room, we're going to discuss these 3 concepts. And here's a reminder, and it seems silly to have to say it, but it is true. You're in control of the entry. Good morning, Erla. Good to see you back in the room. Guys, you control whether or not you enter the market. You control the conditions that get you in. You control whether or not your rules are met. And that's all you'll ever be in control of. Knowing what's working for you, what's working against you, guys, it helps you make decisions, not only on whether or not you're willing to enter that trade, but also how aggressively you may need to manage it. If I go into a trade in a medium probability scenario, guys, it means that I've got to be a little more aggressive in my management. Low probability, just throwing Hail Marys and hope, guys. but you'll know what you're getting into by what you see on the chart. So we're going to break down these three advantages, guys, and this is these are the rules for the high probability trend trade. Ron, I'm about to send you a nickel. Guys, this trade is not your get-rich trade. This is not the only trade. This is the trade that allows you to look at your indicators and say with confidence, whoops, where's my Ninja Trader? I do have the advantage of momentum. I haven't reached treble, but my path isn't quite clear. Let me go look for an area. And you're going to do that every time you open up a chart. Every time you're looking for the rules to be met, you're going to go through that process. I'm going to show you where we're finding these rules to be met. Ninja Trader, there are two workspaces, or two charts on each workspace. There is a large chart. This is a very slow moving chart. I like to think of it as a broad stroke of a brush. It's very difficult to see change on this chart, and it really takes one bar. The most current bar of the market is going to define direction, momentum, and areas. It's going to tell you which way the market is trending. It's going to let you know whether or not you have that advantage of momentum, and it's going to let you know if you've reached an area that can be problematic. These are your core advantages. Because when rules 1 and 2 are met, guys, when you have the advantage of momentum and a clear path on that large chart, you're going to find a way to get paid on that small chart. There's no doubt in my mind. The small chart is a refinement chart. It takes the inner workings of this one bar, and very often you're going to see a retracement, and a retracement is defined as a small move counter to the underlying trend. So when the big chart says down, your small chart's going to give you little up pushes. We take advantage of these retracements because they take us right to our perfect entries, and you'll see the continuation down, and all of this movement on a smaller, faster chart happens inside of this one bar on a large chart. So we're going to define momentum first on the large chart, and I'm going to drop these pictures in the room for you. First, we'll define momentum on the large chart. Then we'll determine whether or not there's something in the way, and then we'll look for an entry, guys. And if you break the order of operations, if you try to circumvent the flow chart and look for entries without advantages, very often it doesn't work out well. So before we talk about the rules, I'm going to let you in on a secret, the path to getting to where you want to be. We're going to learn about these rules, the trigger line, the Fibonacci rules. You will be able to identify both momentum and a clear path. It'll happen quickly. It really will with just a little bit of study. Everyone in the room has the ability to simulate, and everybody in the room is hesitant to simulate until I get it down. I'm not going to take trades yet. I'm going to become a master, and then I'll take trades. Guys, don't do it. Flounder a little bit. Get in there. Make mistakes. Blow things up. But post in the room. Every time you take a trade, guys, go back to those three things. Hey, Mark, this is how I read the charts. This is what I thought about momentum. This is what my gut told me about terminations. And man, that's how I defined my entry. And what you've done is you've opened the door for a private session. You and I are going to look at your chart. We're going to talk about your chart read. We're going to celebrate victories. And if there's a mistake in the read or an opportunity to do something better, we're going to address it, and we're going to create solutions together. If you keep it simple, if you're looking for 1 or 2 trades, guys, life is so much easier as a brand new user. There's countless opportunities in the market. Get really good at one thing that consistently produces results, and then look to add in, and very much that keeps you from making mistakes when you're looking for the rules. I'm going to give you guys plans. I'm going to give you a couple things right now. So the first thing I'm going to give you is what we call the KISS plan. So in my room, if I pull the trigger on simulator live in front of you guys, it means that I've either been able to define the entry for a high probability trend trade, or I have the best of the best, what we call a 50-50 trade, trading the potential to break areas. It's the only time I'm going to pull the trigger in the room, guys, so you're going to see there's an awful lot of waiting. But I'm going to give you this plan because this is the beginner's plan on Ninja Trader. I'm also going to give you, because I know I have some TradingView people in here, I'm going to give you the TradingView plan. And one of the consistencies between these two plans is they are exact. There is a specific set of rules, a checklist to get you into the market. And checklists help reduce opinions. So there are both trading plans just dropped in the room. I'm also going to give you a couple spreadsheets. The first one is the TV journal. Let me open it up and I'll show you exactly what's on it. It's on a different monitor. These are the three trades, HVA, trend, and momentum. These are the three trades that Nexgen presents in the plan for the TradingView platform. These are pictures of them because repetition creates recognition. There's some ideas on management. There's some ideas on when it's time to not take that next trade. This spreadsheet that I'm dropping in is your NinjaTrader version. So depending on which platform you're on, it depends on which one you're going to look at. The NinjaTrader version defines that individual advantage of strong triggers, of clear path in the entry. It gives you over 500 pictures of Nexgen users using the software they've presented in the room. I've just stolen them for your study. Ideas on the NASDAQ, management, patterns that repeat themselves, a place for you to build your plan. And then guys, both sheets have trade tracking. And the trade tracking sheets are going to help you get to where you want to be faster. Every time you take a trade, annotate it. And when I talk about annotating a trade, go back to momentum, termination, and entry. Use the language, strong triggers, no termination conditions, pull back to an area inside of triggers. And then what you're going to do is you'll be able to discuss those core advantages, momentum and path. And then most importantly, there's a spot for feedback in class. So Boaz, you just put yourself on the stage. So when Boaz posts in my room, we're going to take a look at his chart. And I'm going to say, okay, he says that he has momentum. This is exactly what it looks like when the smalls break away from the large. He had a clear path. He hadn't reached trouble, and he had cleared the previous trouble. And he said, look at this. I ignored the divergence because it's a high probability trend trade. Ladies and gentlemen, I want you to see his entry. Boaz bought the low tick right at a midband, right inside of triggers, and took it all the way up to Fibonacci resistance. This is the high probability trend trade. This is the perfect example of the high probability trend trade. So there's really no feedback except for saying, holy smokes, Boaz, that was probably the easiest trade you'll ever take. And perfect, it goes in the plan. Had there been a mistake, we would have talked about it. This is what you missed. This is what you didn't see. I am going to steal his picture and go to the client trades because I want you guys to use these as a study guide. So I'm going to drop his picture in here because it is the perfect high probability trend trade. This is how I built this one. And guys, that's what's going to happen every time you post in the room. What is the last chart called? So, Chariot, when you mean the last chart, oh, on Boaz's? I got you. Hold on one second. This is a range chart. This uses range bars, not Renko bars. It is the third chart that you can add. If you're brand new, if you're working on a plan, guys, it's going to confuse the hell out of you. They're just different platforms, Caleb. Some people are using TradingView. Hold on, let me, squirrel. This chart, Chariot, see how it has strong triggers? It confirms the advantages. That's all it is. Your range charts are a confirmation chart, but the challenge is, as a brand new user, a lot of you will use them to break your rules to get into a trade that you shouldn't be getting into. Once you're comfortable on Renko, this is a great enhancement. Until you're comfortable on the Renko charts, this will prove to be a little bit of a distraction, I find. But this is a range chart. That's what uses the market flow. And then Caleb, some people are on NinjaTrader because some people have been with Nexgen for 20 years and 10 years and 5 years. And And we've been teaching on these Renko charts since NinjaTrader came in. John Novak wrote indicators for. One of the challenges with NinjaTrader, Caleb, is it's not the most stable platform in the world. And because Nexgen created the funding company, John Novak wrote indicators for, and we've developed plans for TradingView, which proves to be a little more stable. And guys, we will talk about TradingView as well. Where NinjaTrader uses Renko charts, TradingView is going to use minute charts. But the trigger lines are the same. The one-to-ones are the same. The divergences are the same. The mid bands are the same. And guys, there's a plan for using either. So, Caleb, one is not better than the other. They are different bar structure and just different platforms. It would be like dating two different girls. This is your blonde, and this is your brunette. And they both smell nice. It just depends. It's a personal preference thing. Does that make sense? TradingView is a relatively new addition, and I'm trying to cover both within the room. Because I've got people using both, it's important that you get your questions answered on both platforms. So let's go through the basic concepts of momentum, path, and entry. Bring this up. Momentum first, guys. Momentum is rule number one for a reason. Momentum is always momentum, no matter which platform. So both charts are going to have trigger lines. There are small triggers. Two solid lines create a small trigger. Two large dash lines on Ninja create the large trigger. And they just work together to define momentum, guys. When these trigger lines are facing the same direction, when they're vertical in an uptrend, the background is green. When they're going down with a red background and a downtrend, there is separation between the small and large. Guys, it looks like scissors that are open. When you have separation between the small and the large triggers, guys, this is strong triggers. And when I have strong triggers, the odds are favorable for the market to continue up. Whether you are on TradingView, whether you are on NinjaTrader, guys, strong triggers is always your best look. It's important to be able to recognize it. And once those triggers close the gap and the smalls work their way inside, this is what we call weakness. And these weak triggers, anything could happen up or down. You typically see retracements from the middle of nowhere. This is when key areas are more likely to hold. So on your NinjaTrader charts, it's going to look just like this. It's either strength, rule number one is met, or it's weakness, rule number one is not met. On your TradingView charts, because they are minute charts, there's a little more of a read that goes into it, guys. And so smalls above the large would still be momentum, but because it's such a slow chart, I want you to pay attention to where price is, the price bar, where the current price is, in relation to those small, fast triggers. When you are left of the triggers, whether the market is going up or down, you are on the strong side. So if these triggers are vertical up and you're left of them, it is longs, longs, longs. And this is where the longs are going to be the easiest. Once the price breaks inside of the triggers, begins to weaken the triggers, you can still take longs. They're vertical, they're up, but you may have to manage a little more assertively. This is where you get some fluctuations. Once you get to the right side of the triggers, this is where longs become more difficult. You're now on the weak side of the triggers. So it's a little different on TradingView. Currently, my small triggers are up. I'm above them. I'm on the strong side of the triggers. I was strong. I transitioned. Notice that the market goes sideways from the weak side. And guys, you'll be able to use this all day long. It's a little weird right after news because you get these huge pops. And the same is true on the S&P. The same is true on crude oil. I am on the weak side. Well, actually, yep, there's price right there. The triggers are rolling. I'm on the weak side. There aren't going to be any easy longs, guys. There's not going to be an easy long trade for you, especially not in areas. And that's going to be the second thing that we talk about. First, it is defining momentum on the charts, recognizing where you are in relation to those triggers. And then second, this is the path part. Is there something in the way to mess up my good time? Caleb, you'd like the extra large indicators removed from your chart They're confusing. When all of them cross, it becomes crowded. Caleb, I believe what you're talking about. Okay, go to your drop down for me. Go to your trigger line. Are you on TradingView? I'm assuming you're on TradingView. You're on NinjaTrader? Then show me a picture of what indicators you want to get rid of. I don't know what the extra large indicators are. Will you show me a picture of what you want gone? And I'm not going to tell you whether it's a good idea or a bad idea, but I may take a second to tell you how they're used. And you may not want to eliminate some of the indicators that are put into that workspace because we're using all of them to create advantages. Show me a picture and I'll show you how to get rid of it though. Guys, things that can stop the market, whether it is NinjaTrader or TradingView, you're going to see divergence high lines, these magenta lines that print off of a pivot. You're going to see divergence low lines. It's a cyan line that prints off of a pivot. These lines just show you exactly where the market turned and lost momentum. Exactly where the market turned and lost momentum. Guys, when the market gets back to one of these lines, that line could stop it. That line could create an untradeable bounce. That line could reverse it. On both platforms, you're going to see one-to-ones. And one-to-ones, when the market is trending down, may behave as support. When the market is trending up, they may behave as resistance. On both platforms, you're going to see the mid-band. It's a moving average that runs through the center of the screen. When price is below it, it'll be magenta. It behaves as resistance. When price is above it, it's green. It can behave as support. And now here's the difference between the two platforms. Your NinjaTrader is going to have Fibonacci, guys. And Nexgen has built an entire business around Fibonacci for nearly 30 years. You're going to see Fibonacci resistance and you're going to see Fibonacci support. These are areas where the market may turn. These are areas that could create a bounce. These are areas that could stop all forward progress. And you'll know about them long before you get to them. On TradingView, because we haven't yet been able to put Fibonacci onto the TradingView platform, we're getting closer. We've got programmers working on it. We're just not there yet. What you're going to see are zones, and these are built. This is an indicator called Chart Prime. If you don't want to purchase Chart Prime, there are free versions available, but it's the same thing. It is areas of resistance, areas of support. We can use these areas to understand when we really shouldn't be taking that next trade, because these can create a bounce the way they did 17 times, and support can create the bounce as well. Divergence lows can create the bounce. One-to-ones can create the bounce. So what you're going to be able to do is you're going to be able to look at your chart and you're going to be able to say, you know what? I've got strong trigger lines. The advantage is amazing. Life is great. I also haven't reached an area, and now I'm going to go look for an entry. So momentum and path, guys, is the key. I'm going to give you the secret to knowing when these areas are more likely to hold and when these areas are more likely to break, guys. And it's all about counting trigger lines. Trigger lines tell the story. Trigger lines are going to give you the information that you need. So to define a termination condition, to have to say to yourself, I no longer want to take a trade in this direction. This is an area that could stop the market. This is an area that can create an ugly retracement. Guys, if price reaches one of these lines, whether it is a one-to-one divergence high, whether it is Fibonacci resistance or support, just count your triggers. And if no triggers make it through that area is more likely to stop the market than that area is to break. Same is true at support. You're going to see this all day long. You're also going to see it on TradingView. And you're going to recognize the tails where they try and fail. And all this is a beautiful version of areas that can stop the market, areas that you shouldn't be trading into. The goal is that you trade to these areas, that you trade with momentum to get to the areas rather than trading directly into the areas. So when you get to an area, if no triggers break, guys, it's a termination. Rule number 2 is not met. It's okay to sit still. If 2 triggers break through the area, your small triggers, you can say to yourself, this has the potential to break, but it's not quite a clear path. It's only potential. And it remains potential until all 4 triggers get above resistance, then resistance behaves as support, or until all 4 triggers get below support, then support behaves as resistance. So no triggers, just assume the area is going to hold. You've lost your advantage. 2 triggers, it has the potential, but it's less likely. 3 triggers is when you start to see areas that are more likely to break. The plan that I gave you, that KISS plan, it covers the best way to take this trade to give yourself the highest advantage. And it goes back to the very basics. If I don't have a clear path, I'm going to rely on momentum and a low risk entry. If I don't have momentum, I'm going to rely on a clear path and an entry. So it all goes back to advantages. So we're going to work on these 2. We're going to work on these 3. Caleb, let's see what you got, man. You don't want the mid-band? What is it that you don't want? The ones in blue. You don't want price bars? There's no indicator in here. Are you talking about the trigger lines? Do you see how it's not pointing to anything, Caleb? Am I missing something? Help me out. The start of the arrow, right here. You don't want these indicators on your chart? Can I talk about how we're using them? Hell yeah. That is a huge part of the accuracy of entries, Caleb. So let's talk about it real quick. When the rules are met on the large chart, 100%. When you have momentum, when you have a clear path or the potential to break, guys, rule number 3 for the high probability trend trade says that we're going to use a limit order to buy or sell a pullback, guys. And remember, that pullback is that little push down. And we're going to buy or sell that pullback at areas, and the areas need to be inside of triggers, guys. So the triggers become very important. And on your entry chart, man, you know what's cool is I actually made a picture, Caleb, this morning about defining entries. So your trigger lines are going to help you with accuracy. Your trigger lines are going to help you reduce risk. And I'm going to show a regular entry real quick, and then I'm going to come back and I'm going to address this picture. So the rules for entry for the high probability trend trades state, when the rules are met on the large chart, guys, when the large chart has momentum, when the large chart has nothing in the way, this is what it's going to look like on your small chart. Your small chart's going to be screaming. You are going to first wait for a reversal bar on your small chart. The reversal bar signals the beginning of the pullback, at the beginning of that little fight. And once you have your reversal bar, you are going to know where that retracement is most likely to go, Caleb, because it's going to go somewhere from the bottom to the top of the triggers. And you're wondering, well, why do I have 2 large triggers? Well, because we use 2 charts. Let me get back to it. Man, I've got a lot of pictures, don't I? Because we use 2 charts, we can increase accuracy by using not only the large triggers from the large chart to define the retracement, where price is most likely to return on the large chart, and see how that is your synthetic triggers, but we're also going to use the large triggers on the small chart, because these are both moving averages. On the large chart, price is more likely to return to these triggers. On the small chart, price is more likely to return to these triggers. So what we're looking for is a consolidation of the retracement point. And by having both sets of those triggers on your entry chart, what it does for you is it decreases the size where the retracement may go. And then the entry rules say we're going to buy or sell from an area inside of triggers, which means that if these triggers are tight one on top of each other, there's less room for an area inside. That's how we define our entry. And entries come from a tick or two below the lowest point of resistance inside of triggers. So the same is true here. When the rules are met on the large chart and you're looking for an entry, the tighter these triggers are, the smaller the retracement range, and the less amount of room that you have to put an area inside. So it becomes really important, Caleb, because when they're consolidated one on top of each other, it's easy to pinpoint. The accuracy goes up, and your stops go where the market shouldn't, which is on the other side of those triggers. That's where your advantage from rule number 3 is gone. So Caleb, if you only have these triggers on here, you had no way of knowing that the market may have retraced all the way up and closed the gap to these triggers. Does that make sense? Nothing on your workspaces is ever put there on accident. Huge difference. This is about $350, $400 worth of risk. That's about $100 worth of risk. And we use the concept of what we call favorable large triggers. When they overlap like two snakes riding piggyback, man, that's the best of the best, Caleb. And let's look at your picture. So when you got your reversal bar, there's no areas inside of the triggers, and it becomes a little more difficult. The rules aren't met, and look what happened, Caleb. Ultimately, the market goes up because once you start getting to the wrong side of these triggers, there's just no telling if or when the market's going to stop. Awesome question, dude. Great question. And I know that it gets a little confusing in the very beginning when you're trying to figure things out. This is where embracing the language of the rules really does pay dividends. If I have momentum, if this area has the potential to break, guys, use the language. I will buy a pullback to an area inside of triggers. And what that does for you is it gives you an amazingly accurate entry. And there it is right there, putting the three concepts together. If I have strong triggers, if I have a clear path, my entry is a pullback to an area inside of triggers. And guys, I'm going to zoom in on this one more time. That's the accuracy the methodology provides. So if you use the language, you're going to find the entries. Alex, you think you have an example of it here? Well, Alex, it did retrace right to the triggers, didn't it? Absolutely. And they're one on top of each other. The only thing, Alex, is you didn't quite make it to the mid-band. You didn't quite have momentum. And you certainly didn't have a clear path. And while price still returns back to the large triggers, probably not an entry to be had there. But that's a good example. Guys, look at it over here on the large chart. Price accelerates away from the triggers, hits trouble, snaps back. It's just a fact of life. Price returns to the large triggers. We use that to our advantage so that we can really nail these entries, so we can really reduce risk, so that we can have the highest chance of success. Price pulls back. We're going to buy an area inside of triggers, guys. Price pulls back. We're going to buy an area inside of triggers. It's so important that you learn that language because you will literally call your shots. You will literally say to yourself, I don't have my reversal bar. Things aren't right yet, but if I get my rules met here, I can identify before the reversal bar ever prints an area inside of triggers. If you back up over this way, this was during news. Odds favorable momentum, clear path. Guys, look at the bottom of that tail that I circled. Pull back to an area inside of triggers. And that was right before news. But do you guys see it? This is your pattern if you're a brand new user. That's the easiest trade you'll ever take. All this momentum, Nothing in the way. Guys, that's when life gets easy. And it does it over and over, even during news, to the mid-band in the retracement zone, mid-band in the retracement zone, mid-band in the retracement zone, like 7 times. And then it pulls back, closes the gap to those large triggers, pulls back, closes the gap to those large triggers. And then when we hit it, 2 triggers through, that's when the ride is over. And what's it do on the way down? Pulls right back to the area right at those large triggers. So it's just a pattern. Smalls are trying to break below the large. I'm coming from a termination. Do you guys see? And this is how you'll be able to call your shots, guys. So Caleb and everybody in the room, do you see that mid-band inside of those triggers? That's your focal point when the rules are met. If I have momentum, which I do, if my path is clear, which it is, my rules say I will sell an area inside of triggers. And because the triggers are tight one on top of each other, guys, if we get this entry, our risk is minimal, 4 to 5 ticks above those triggers. Does that make sense? Separation between the small and large. That's the perfect entry. So Ollie, will you do me a favor? And this was S&P. I need something from you, Ollie, to make this easier. And I'll start with, I see momentum, and momentum is amazing. The one thing that I can't see is where you entered the market. So guys, if you do me a favor, every time you take a picture, we'll keep that limit order in there. Every time you take a picture, whatever you're using for a capture tool, make sure that you get me the large chart. Make sure you get me the small chart. And then instead of what do you think, let's change the language to this is what I saw. I saw momentum. I saw a clear path. I saw an area inside of triggers. Fits my rules. Ollie, but your large chart is absolutely perfect. Where your entry is, that large chart is perfect. Guys, here we go. Momentum, clear path. There's my reversal bar. When I get the reversal bar, I know the market's likely to retrace somewhere in these trigger lines, but more specifically, it's likely to bounce at an area inside of triggers. Guys, this is the high probability trend trade. This is a trade that typically wins 70 to 80% of the time. This is a trade that is your core. This is the one that teaches you to recognize momentum. This is the trade that teaches you to recognize a clear path. This is the trade that teaches you to recognize your entry. The only thing it doesn't guarantee is an entry or a winner. Do we have to wait for the background to turn green or red anytime, or is that not a major pointer? So the background on the large chart, Caleb, will define the direction you should be trading. Why does it do that? Because the background turns green when the small triggers break above the large triggers. And the only way, Caleb, you could ever have Rule 1 met is if the background is green and your trigger lines are green. The background is red and your trigger lines are red. That's a large chart. Your small chart, you may get little fluctuations in there. I don't pay attention to the color so much. And guys, this is one of those examples where dag nabbit and carn sarnet, I didn't get an entry. But look, I still have my rules met. Maybe they'll come get me. My rules are still met. Just because this wasn't my entry this time doesn't mean, doesn't mean they can't come back and get me again, right? This is the perfect look. I've got a well-defined entry. Ladies and gentlemen, I have chased a market for 100 points before and not gotten an entry. My rules are still met. Strong triggers. I have not reached trouble on the large chart. Guys, I'm hoping this little 1-to-1 on my smaller insignificant chart creates a bounce to get me back to a mid-band inside of triggers. Is everybody with me on this? Guys, this is the same thing that we do every day. First, define momentum. Define your path. Look for an entry. That's the high probability trend trade. And Caleb, did that make sense on the background color? Your large chart, guys, know where the rules are met. Let's go back. Let's back it up just a little bit here. Your large chart will define direction, momentum, and areas. Your small chart is nothing more than an entry area inside of triggers on the small chart. Does that make sense? It's like a flow chart. If I have this, this is what I'll look for. Guys, this is a beautiful looking setup. All I need is that darn small chart to pull back to the area inside of triggers. If it doesn't, it's not my money. If it hits 63, 26, 25 before I get an entry, it's not my money. And remember, this is the first trade. This is the highest probability trade. Boom, we reached a termination condition. Guys, I've got to say to myself, damn it, this isn't my money. It didn't give me an entry, but the rules were met 100%. Smalls below the large. 1, 2, 3 triggers through support. It has the potential to break. It definitely pulled right back to resistance inside of triggers. Do you guys see it? While we were watching the S&P, some of you were taking trades on crude oil. Right back to the areas, right inside of the triggers. That's where it started to move down. The challenge with this trade, guys, and let's go through why. Not even the challenge. We had momentum. We had our entry area, but we didn't have a clear path because all 4 triggers weren't through the area yet, which means this is only the potential to break. And guys, if I'm relying on momentum, divergence is a loss of momentum. Divergence on the small chart is one of the biggest killers of trades that only have the potential to break. And we'll see what happens here. And the most common losers on these potential to breaks is divergence. That's the thread that ties it together, guys, because the 50-50 trade, the potential to break, 3 or 4 triggers need to be through the area to optimize your chances of success. Strong triggers on both charts, separation on both charts to optimize your chances of success. No divergence on the 5-1. It says it right on the plan. Divergence, no trade. Says it right on the plan. And you can see it fighting. And once again, I took a picture this morning. I want you guys to see this. 2 triggers through. No divergence, you get a push down. Divergence prints, that's what killed that potential to break. Guys, you're going to see this over and over and over. And that KISS plan is designed to optimize your chances of success. There's 2 divergences against it. Look what the market's trying to do, guys. Takes a lot of the frustration out of trading when you go back to very basic advantages. So that's kind of our foundation. We're going to open charts and we're going to say, okay, my small triggers are down. I am below them. That's a great look. Guys, price is below these areas. And my small chart's not giving me anything that says, hey, let's go down. Not yet. My small triggers are up. I've got this zone right here, guys. And look at this zone. 1, 2, 3, 4, 5, 6, 7 hits on that zone. And they couldn't get below it. Are you going to be the guy that makes it happen? Or are you going to be a little patient? Are you going to wait? And Ollie, I want to look at yours, 63.36. I'm gonna do the 2 charts for us real quick. It's 63.36. I just want to talk about what's going on. And Ollie, do me a favor. Let me know if I'm reading this the way you read it. Because this is the typical new user read. And I've done this a little bit. I get pretty good at it. These triggers are down. And these triggers are down. and there's nothing in the way. Is that kind of what you were looking at on that large chart? That's good. So I'm going to go back to these three concepts. You don't have separation yet, so it's not the strongest triggers, but you've got agreement. Everything's pointing down. And even better, guys, when one of these areas, when a Fibonacci indicator, when this reverses the market's more likely to push down. So you've got total agreement down. And here you've got strong triggers, and the only thing that you didn't have, Ollie, is a pullback to an area. So this would be an entry that I lovingly refer to as the JTFI. You jumped the fudge in. Is that fair? Everything's going down, I'm going to jump in. Pretty cool, right? Once you have momentum and path, guys, you're going to find a way. And because everything was screaming south, you could ride that momentum down. And it really hasn't blinked. That was the closest blink that you got. And you could get paid at these one-to-ones. You could say on this large chart, man, with that much momentum and nothing in the way, I'll carry it down to these one-to-ones, right? So management will play into it. The only challenge is that if you're using the idea that price shouldn't go above these triggers, this is where your stop is when you just jump in, or you have to just pick a number. Because this is where the market shouldn't go, and because you don't have anything to really block it, you could chase it behind the triggers. But these jump-in trades, when they fail, very often they pull back and create a trend trade. Great stuff, man. That is great usage of the indicators. And then when you get weak triggers at the bottom, do you see it? There's your weakness, guys, even with a clear path. And absolutely no areas inside of triggers. My goodness, could it be this basic? Watch this. I don't have momentum because the smalls are inside the large. Will you guys give me a Y if you see that? Smalls inside of the large. This is what we call a weak trigger. And when I have a weak trigger, the phrase that's gonna sit with you is anything can happen with this look. I do have a clear path. I didn't reach the fib, 4 triggers below trouble. The path is as clear as it could ever be. But watch this. If we use the language for entry, this is how rules are going to keep you out of the bad stuff. I'm going to sell a pullback at an area. And guys, if that's the only language you're using, you got run over to midband. Caleb, here comes those magic triggers. Inside of triggers. Guys, this is your basic. My area is on the wrong side of the triggers where I have no freaking idea if or when or where it's going to bounce. So by going back to these three concepts, once again, I avoid a loser. 2 out of 3 gone. Guys, that's not my money. I don't care, couldn't care less about what's happening on this chart anymore because I don't have the advantages I need. And look at how far it pushes up. And it happens to push all the way up to almost a mid-band. All of my triggers are below. I'm not going long, and sure enough, they finish the move down. Price reaches an area, 4 triggers below. Guys, this area is more likely to continue down than up, and that's exactly what it did. And that's what we're going to do every chart, guys. We're going to go back to the very basics. If we looked at TradingView, once again, I'm on the strong side of the triggers. Guys, that area that held 75 million times, check it out. It's still holding, isn't it? Crazy. You know where the market could turn. You know where the market. It becomes evident the more you study. There's another one of those damn zones right at a VWAP, right at a midband, and sure enough, it stopped the market cold. The number one taker of money for new users is trading into termination conditions, guys. Is trading into areas that may stop the market. The easiest money that you'll ever make, and Ollie Hader, you just proved it. When everything is screaming in the direction, there's nothing in the way, guys, buy or sell a pullback. It looks like a tail on the large chart. This is the easy money. Don't trade into areas. Trade to areas, right? If I enter here, I'm trading to Fibonacci support. If I enter here, I'm trading into Fibonacci support, and I am quickly separated from my money. Good stuff. Good little review in the morning, guys. TradingView takes more patience, but TradingView creates more patience. It takes 15 minutes to create one bar on TradingView. Make sure you're on the good side of everything. These Renko bars print fast, right? It's a number of ticks, not a matter of time. I still don't have momentum. I've got absolutely nowhere to go. And guys, look at what's going on. The market's trying. I don't know what's going to happen, but I've lost all my advantages. So we're going to go back to the charts that have been posted this morning, guys, and we're going to talk about the three concepts on every chart. We're going to talk about momentum, we're going to talk about path, and we're going to look at your entries. And let me make something very, very clear. I will never tell you guys how to trade. I will never tell you guys when to enter the market. I will never tell you guys this is how you do it. What I will do is I'll look at your charts, I'll look at what you present, and I will talk about the advantages on each and every chart that you post in this room. I will talk about your chart read. I will talk about what you told me you saw in your chart. And if there's a way that I think you could do it better, guys, I'm going to help you do it better. That's my promise to you. So when we look at Paul's chart, strong triggers. Smalls are below the large are wide. Guys, this is momentum. Let's do this. I take a lot of pictures. I really do. So a trade is first momentum. Smalls below the large. Guys, he had momentum on his trade. A trade is a clear path. He had a clear path. Beautiful. A trade is a pullback to an area inside of triggers. He had one there. He had one here. The only challenge, Paul, that I can find on this chart is you're in all the way down here rather than up here. So yes, I made a picture. You had the perfect trade. An entry at the mid band rather than 4 bars down, it gives you time to manage this trade if something goes wrong, guys. And what went wrong is 1, 2, 3 divergences on a small chart is a termination condition. 3 divergences on a small chart removes your clear path. And what it is it is your small chart showing you change that you can't see on a large chart. So third divergence was your exit condition. If you had gotten in at a mid-band inside of triggers, if we had just embraced the entry rules, you had time to make money down to trouble. And when divergence printed, you probably would have come out of this with a little cash in your wallet instead of a loser. Does that make sense, Paul? And guys, sometimes people just aren't in front of the market. And if you weren't in front of the market for the entry, then there's nothing you could do. Great entries create very manageable trades. You would have made $100 and break even, right, Paul? And this is why we talk about focus on your entries, guys. Put the whole recipe in place. There is this misconception that waiting for the market to go in the direction of your trade creates an advantage. There's times when using that confirmation bar, that reversal bar pays dividends. But if your large chart is perfect, guys, you've got to learn to trust that entry. It's virtually no risk, and it's amazing profitability before you ever get into trouble. Nice trade, Paul. And then let's go back. A trade is momentum. A trade is path. and a trade is entry. So Paul, you went long right here. A market that is completely void of momentum, a market that has absolutely no clear path, and a market that doesn't even have an area inside of these triggers. So guys, this is what we call avoidable losses. These are negatives that don't ever have to hit your account if you go through those three concepts. And then Paul, your annotation is beautiful. Revenge trade. Paul said, F you market, I don't care that I don't have advantages, you owe me. And he just gives even more back. That's an emotional thing. Guys, checklists, if you have a checklist with these three things on it, it's going to be more difficult for you to feel good about taking this trade. The fact that Paul didn't win this trade had him upset. And he said, well, if it's not going down, it's got to go up. And there was a ton of resistance and absolutely no momentum. And Paul, it can't be an HVA long because you're not coming from a termination condition. The rules aren't met. It can't be an HVA long because you don't have a clear path. The rules aren't met. The first two rules for the HVA aren't met. And then we're going to address one more. This would have been a good entry. Paul, you're either going to love me or hate me by the end of this. That's what you have working for you on that one that you said was a good entry. Hindsight's a mofo. Because Paul said, damn it, I could have made money here without momentum, without a clear path, without a well-defined entry area. And you're going to convince yourself that this was a fluke, that was a glitch in the matrix, right? And Paul says, I still don't have jack squat working for me, but because I saw the market go up, that had to be a good entry. And Paul, I disagree aggressively on this one. The market's gonna show you this every now and then to get you to stop wanting an edge. Because Paul, every trade that you take long into resistance, somebody's taking your money on the short side. And that's how trading works. So I'm going to disagree. It's still an absolutely crap entry because it's got nowhere to go and nothing to push it. Does that make sense? But here's the cool thing, Paul. With all of this momentum and the price bars above trouble, there's a trade that was developed by a gentleman in this room. It's called the chili dog. And Paul, the chili dog doesn't happen down here. The chili dog actually happens up here. Have an amazing day, my love. I'll see you tonight. When the back of the bar clears trouble, which means, Paul, that you're actually trading about up here when your rules are met, and it's a way to ride that momentum. So, Ollie Hater, this is kind of what you did. Everything is screaming. There's nothing in the way. Jump the fudge in, baby. Ride it up to the next area. Does that make sense, Paul? So one of the things on the chili dog is the back of the bar definitely clears here, but price is all the way up here, which puts your entry somewhere around here. And the key is to make sure that you've got room to pull off 110 bucks before you smack into a fib. Awesome read though. Perfect concept. Just a little entry tweak. Man, but Ollie Hater, when you understand momentum and path, that's one of the ways you're going to find a way. And you're going to see it presented in this room a lot. It's become a very, very popular trade. And then, Paul, this is the same concept. Weak bottom, so there is no HVA trade. Weak bottom, the triggers got through. And what this is right here, Paul, this is a momentum style entry. Price breaks above the Fibonacci area. The small triggers break above, and you snap right back to the fib based on these strong triggers. This is really just kind of hoping momentum carries it. But check this out, Paul. There's your chili dog right there. Just a little bit of patience. Momentum, no problems. There's that chili dog, just up a little bit higher. Remember when I said the easiest trades that you'll ever take are trading away from Fibonacci with momentum? That's what you're looking at right there. You're trading away from all the problem areas, and you're doing it with momentum. Nice job, dude. Great stuff this morning, Paul. I appreciate that you post in the room. There's a lot of great lessons for everybody in the room when you guys do that. All right, Pete. Every trigger is above support. Every trigger says up, and you trade directly back into support with absolutely nothing in favor of the trade. That's the chart read, guys. No momentum, no clear path, no area for entry. Let's talk about why Pete did what he did. Pete said, I've got weak triggers right at Fibonacci resistance. This can stop a market. My small chart, none of my triggers got through that same key area. That is a good sign that that area may hold. Pete doesn't just jump in over here hoping that a red line stops the market. Pete says divergence printed. That's a loss of momentum right at a key area that could stop the market when my large chart is telling me that it's likely to stop the market. Pete said my small triggers are down. I'm going to try to jump in, but I'm going to take really quick profits because it's not the perfect trade. This is aggressive. It's counter trend trade. It's directly into a fib that could stop the market. Hell, nothing rolled on the small chart. But you got away with this one. I know the reasoning behind it. There's got to be a point in your trading, ladies and gentlemen, where you're okay not fighting everything, where you're okay just saying, you know, I don't have to be in every move. I'm good at this. There's more trades coming. And if you're a brand new user and you're trying to recreate what Pete does, you're probably going to lose a lot of money really quickly. This one is what we call threading the needle. This is brilliant. So I'm going to beat Pete up a little bit, and then we are going to show something pretty cool here, guys. Where Pete takes this trade, he has strong triggers. Where Pete takes this trade, he hasn't quite reached the next area. It's hard to see on the large chart. You can see on a small chart that he still has room to get there. Pete says, my trigger lines have a huge gap, and that's entirely too much risk. I'm going to see if they want to finish the move to that fib. I'm going to force the market to confirm because that confirmation bar gives me room to trouble, and the confirmation bar gives him a place to put his stop. If you take a first glance at the large chart, it looks like he's trading into everything. Guys, the trigger lines say that this area has the potential to break. The price bars say he hasn't reached the next area. I saw this one this morning, Pete. I was like, you completely threaded the needle and found a little snippet right in between trouble. Nicely done. Riding momentum. All right, let's see who's next. Paul W. Let me see. This reversal bar at the edge of the 13.2 synthetic tribs, whether short or long, is good for solid ticks more often than not. Is it? Okay. So let's go through it. Termination condition reached. Termination condition reached. Momentum up. Momentum up. And Paul says go long into the termination condition. It's good for ticks, right? It's good for ticks. How do you write this plan? If the market hits a termination condition and reverses, hold on, let me see, from 09 all the way down to 85. So if the market hits a termination condition and then drops $300, 30 ticks from that termination condition to the tick, go long because it's probably going to go back up. I don't know. Could you have made money? Hindsight says yeah. But Paul, why didn't you go long from the synthetic triggers here, right? I know you're at the edge, but they got below it. It's easy to say that was a good trade, right? That's the one. Paul, that would have been a great trade, right? Your synthetics are down here. One of the things that guys, I want to encourage you to do is just go through the ideas of what you see. Talk about the momentum, right? Talk about the path or the lack thereof. Paul, what market is this? This is crude oil. Is that from this morning? So Paul, see that tail right there? That tail, my friend, is the pullback to the mid band inside of triggers to get to your termination condition. That tail right there has the potential to break and room to the next area. It's fun to be the rock star. That was your trade right there. That one fit the rules. That was an awesome opportunity. That one fit your plan. It was low risk. You had room to get to profits. This one, everything's going wrong. The triggers are turning. They're still above, but man, you see the difference? And very often it's reaction time. And guys, everybody goes to the bathroom in the morning and everybody has to walk the dog and get a cup of coffee and toast a waffle. Maybe you weren't there for that one. But that's the easier of the two without a doubt. And the fact that it went back up this time doesn't necessarily create a plan. Go back and let's see how many times with no triggers through an area the market just arbitrarily runs, right? Resistance all the way back. Support with momentum pushes the other way. Divergence low pushes the other way. Support pushes the other way. Divergence high pushes the other way. And if you do this, what happens is you start to believe, I don't have to trade into areas. That's my easy trade. I don't have to trade into areas, right? And this is another great example. That one with the potential to break was probably the easy trade to get to support. Once you reach support, once you reach resistance, once you reach support, once you reach resistance, I mean, my gosh, how good are these fibs? But it's the fear of missing out, right? It's the fear that there will never be a trade again, that I'll never see it happen again. This one had 3 triggers through. There's that damn divergence ruining your good time once again. So there's some basics, there's some patterns. And Paul, you're always the best sport ever. Guys, you're going to say, look what the market did. I probably should have taken that trade. Try to avoid that. Try to say, my rules aren't met. I'm cool not taking that trade. It's all right to not be in that move. I know that it worked this time, but let me ask myself, if I go back and I look at price reaching an area and the trigger line's not breaking, does the market stop more than it breaks? Do I produce a loser more than I produce a winner? And guys, rule number 2 is there because John Novak and I collectively probably have 60 or 70,000 photos of the market, of the patterns, and that's how the rules come to be. All right, Pete. Not a strong top, Pete, because the market didn't reverse. Just a termination. When the termination reverses the market, that's your strong top. 2 trigger lines through. Without divergence, it's easy. With divergence, it pushes up higher. You get paid. A second divergence starts to push up higher again. Nicely done. Choosing to take the 50-50 with divergence, it works out. Nice job, Pete. Paul W. So there it is again, the exact same trade. 2 triggers through. The first one without divergence, right at the area, gives you time to manage. You get in late, divergence prints, nice management. Nice management, Paul. Not the perfect trade, right? Because not only am I hoping that this area breaks, I'm hoping that this area breaks, I'm hoping that this area breaks, I'm hoping that this area breaks. That's a pretty good range, right? And then Paul, you get in, you're in at 80, and it goes down to 70. So that was your $100, right? Didn't quite get there. Divergence prints. Great management, Paul. Not the perfect trade. Something changes. Let me get out for a tick. Nicely done. Great management on a medium probability trade. Pete. All the termination conditions. No momentum. No reason to get sucked in for the long. Nice read. Paul, price reaches resistance. All of the triggers are down. Reversal bar closed at the edge. It's a repeating pattern. Is it? Cool. I like it. I like it when you study. Gonna find all the moves in that market. Every one of them. I like it when you guys study. I like it when you start recognizing patterns. Momentum, 3 triggers through. Pete takes the momentum trade, gets paid. Momentum dies, he exits. And then Pete, there it is again, man. 2 divergences. It's a rough look. You managed to get paid on it. Nice job. Reaction time, guys. Reaction time. Nicely done. All right, we got through all the pictures. Uh-oh, NinjaTrader crashed. Another one of the reasons a lot of people are moving to TradingView. TradingView doesn't tend to crash. Let me pull my charts back up real quick. Sorry about that. We'll see what TradingView, what's going on live. Look at the areas. They held. And now I am above the small triggers, even though they're down. I made them a little thin, huh? Price is above the zones. I'm on the good side of the triggers. Maybe an opportunity for more longs. One of the things that happens in consolidation is you do start to get a lot of zones. You don't tend to get that with Fibonacci quite so much. If the market consolidates the way it does here, you do start to see a lot of zones on these charts. Smalls are down, large are down, momentum is down, strong side of the triggers. Price has reached trouble. If you were choosing to go short, you've already identified what could stop the market in your short trade. Crude oil has reached areas. Don't see an easy entry anywhere in there. And here comes the S&P over here. It's going to reshuffle for me as I connect. Todd, you don't have to. It's, guys, TradingView is just another option. If you're comfortable on Ninja, stay on Ninja. Guys, I love NinjaTrader. I love Renko bars. The plan is freaking amazing on it. TradingView. I love TradingView. I like the minute bars. I tend to be an aggressive trader. I tend to try to take entries a little early. You can't use, so TradingView, there's a whole bunch of brokers you can use, and apparently you can use NinjaTrader on TradingView. Todd, if you want to use the Nexgen funding company though, if you want to be a part of the family and use our funding company, you can't use NinjaTrader. You will have to use TradingView. That's why John Novak wrote the indicators. Yeah. So it's up to you guys. We'd love to have you in the funding company. We want everybody to come to the funding company. But if you're not comfortable on TradingView, the funding company is going to be a little difficult for you. Todd, I'm not sure how old you are. I'm a crotchety old man, very set in my ways, and I hate change. Just full admission here. I hated TradingView for a week. I did for a week because it was different. Whippersnapper. And then what I realized is that it's the same darn thing. It really is. It's momentum and its path, and it's define an entry that you can prove wins more than it loses. And that's all it is. No more longs, right? And in the same way this was no more longs, this was no more shorts because you don't have the advantages. So it's just different. It's just different, Todd. I'm a fan of both. And I've gotten to the point to where I prefer TradingView. I went from damn it, John Novak, why are you making me do this? To I shut down NinjaTrader after class and I trade TradingView. If TradingView disappeared tomorrow, I wouldn't be sad. Uh-oh, I'm having a problem. Oh, that's why. Hold on. I built an ES tab yesterday to show some. I was like, why are there different markets? I wouldn't have a problem trading NinjaTrader. I love NinjaTrader because one line below, it's momentum. It's not the best momentum. I do have a clear path. I don't have an area inside of triggers. The rules become pretty easy. Absolutely it does, Caleb. It's the instabilities that led John Novak to build the funding company around TradingView. I mean, mine crashed in the middle of a conversation. I wasn't even trading. I don't know when it's going to crash. So that is why John Novak has written his indicators for TradingView. And if you are like me, and you're like, man, it's different and different is hard, I want you to see something. These are your TradingView indicators, guys. Small triggers and large triggers. Guess what? That's momentum. That's momentum, just like Ninja. There is a little different read. That's awesome, Victor. You don't fight the triggers on your entries. You wait to get to the right side of them. Guys, divergence is a loss of momentum. It's the same on either platform. 1-to-1s are 100% Fibonacci alternates. It's the same on either platform. Mid bands are the same as the mid bands, guys. The difference is the zones rather than fibs. That's the major difference. But it's still an area that could stop the market. The language is still the same. And guys, back 25 years ago, Nexgen taught on minute charts because there were no dynamic Renko charts. This is something that was developed. So it's 6 of one, half dozen of the other. What appeals to you? A termination condition is still a termination condition. 2 triggers through is still low probability with divergence on the small chart, right? So it's just a matter of, I don't know, what makes you happy. If you are in my room and you're a NinjaTrader, guys, don't worry. You will always have support on NinjaTrader. If you're in my room and you're learning TradingView, don't worry. You'll always have support on TradingView. I studied both. I was not a part of the Ninja Trader plan building because that was before my time. But guys, I was there. John Novak and I went through all of this together to build this plan for TradingView so that our next-gen Ninja Trader users could transition and feel good about it. But you don't have to. There is no obligation. They're just different. They are just different. So with that, I'm going to take 5 minutes, guys. I'm going to go stretch my legs real quick, pet the dog, maybe eat a granola bar. Who knows? Price has reached a zone. My triggers are 17 days above it. No reason to go short into that zone, guys, no matter what your opinion is. This says don't do it. If you choose to do it, it's on you. It told you not to do it here. If you tried to go short, guess what? You lost. Guys, wait for the easy trades. 90% of your day is going to be doing nothing. For the below, both large and small chart are showing differently. Would it be good to go long? So first, Ollie Hater, I refuse to tell you when to go long. I won't do it. I'll never do it. I'll never say it's good, it's bad, nothing. But watch this. Do you see momentum? Smalls above the large, separation between the two. Let me know that you see it. And I'm the brokenest record you're ever going to listen to, my friend, I promise. Okay, so hold on. Do you see where price reached these yellow 1-to-1s and all 4 triggers are still below it? I want to make sure that we're reading this the same way. That's what we call a termination condition. So if price reaches this area and all the triggers are below, I don't even have the potential to break that area yet. So this is a brick wall. When that reversal bar prints, there's your triggers. And look at what it does, Ollie Hater. It blows through the midband. It blows through the 1-to-1s. And now we're at support, and I hope support holds. But I don't have any rules met. I've actually got odds favorable momentum. I've got strong triggers against me on my smaller, faster chart. So I don't have an entry area either. Whoops. So what I have to say to myself, with 2 of my advantages gone, am I interested in taking the trade? I also want to go through something with you real quick, Ollie Hater. Your chart is funky over here. Can we fix it real quick together? And it did hold, didn't it? See how my triggers look different than your triggers? I want you to do me a favor real quick. Let's get you so that you can get the best information. If you right-click on your small chart, go to templates for me and click load. And I want you to go to 5-1 Renko bar chart. I'm not sure what template you have on your chart right now. This is the one for entry. Where did it go? There we go. 5-1 Renko bar chart. And what that's going to do is that's going to give you the ability to have these synthetic triggers. So watch this. If we look at my charts and have the same conversation. I still have momentum all day long. I still don't have a clear path all day long. And I can say to myself, if I get a retracement, it's likely to retrace somewhere between here and there. It's most likely to bounce from one of these areas. So Ollie Hater, you could say to yourself, if you wanted to, I'm willing to give this trade a shot from the lowest point in that window, because I know that if I get in at that Fibonacci area, my stop is only 4 or 5 ticks below it. Because of this momentum, because that area reversed the market, because I have room to get back and retest stuff, this is where you can go outside of the very basic plan. And you can say, this is what I see. I know that it's not perfect. Maybe you wait for a reversal bar in the direction of the trade. Maybe you just buy Fibonacci support, because check this out. Price reaches support, 4 triggers above, support is likely to hold. So what we did, Ollie Hader, is we reversed engineered the idea of a termination condition. Let me know if this makes sense. The mid-band or the 1-to-1s are likely to hold. Support is likely to hold. Are you with me so far? Whoops. Does that make sense? So termination. Now let's do this. Just for poops and giggles. And I'm not saying trade into termination conditions. The trend is up. The triggers are up and strong on both charts. I have a low risk entry at an area the large chart says is likely to hold. So now you start looking at it. I can't go short. I can't go long. The easiest money says wait, right? But Ollie, a lot of us don't want to wait. Damn it, I want to be in a trade. I want to be in a trade now. Well, it's a bar fight. I've got trend. I've got momentum. I've got room back to trouble. I've got momentum. I've got every indicator up. I've got support that's likely to hold. You could make a really strong case for breaking your rules right here. Does that make sense, everybody? I'm not saying break your rules right here. Guys, this doesn't fit my checklist. I couldn't care less about it. But Ollie, your read is good. But look what those 1-to-1s did. And look where the market's trading now. Was the long really your best option? That said no. Pretty cool, right? We're just going back and we're breaking it down to those 3 concepts every time. Do I have momentum? Is there something in the way to F up my good time? And there definitely was, and they never even retested it. Never even got back to it. And while for a second you're celebrating, yay, I'm going to get paid, and they just turn around and absolutely crush you and take your money. Good job. Great job. And Ollie Hader, keep doing this every day. This is what I see. This is what I'm thinking. And we will go through all of it every day, because this makes the entire class better, without a doubt. You would have gone upside down. Well, I'm glad that you didn't. I'd like to see, and just a heads up, I see everything, my friend. I would like to see what pulled that $1,100 out of your demo account. I would love to see what you did to make that happen. Let's talk about it. It's simulator, man. You are on the high wire with a harness and a safety net. Let's talk about where the losses are coming from. And a lot of times, just a conversation helps correct the behavior. I do see everything, though. If you post a winner in the room, guys, and I see your 6 contracts stopped out from a 50-50 that had divergence that you didn't post in the room, I know you still lost that trade. You know who you are. Jen says, TV does add a benefit. I can see the zone sometimes equal NinjaTrader and sometimes not on CL. Right now on NJ, is that NASDAQ? Oh, Ninja Trader. There is no term where there is on TV, the zone. We don't have momentum on Ninja Trader, so no trade anyway. I think the point is I've got to follow the rules on the platform you're using. And Jen, you're absolutely right. And we talked about that yesterday, and I'll probably never be able to find this picture because I take 8,000 of them. Let Ninja Trader be Ninja Trader. Let TradingView be TradingView. They are different platforms and different bar structures, and you won't be able to always line them up. So trade your plan for the platform you're on. This plan says don't go short into Fibonacci support with all the triggers above it. That's it. These triggers are flat. It's not momentum. And guys, if you look at it, this is a termination condition as well. So if you're being seduced by areas inside of triggers, you're doing it without your large chart advantages. It all goes back to those concepts, guys. The futures markets, this S&P market, exchanges typically $174 billion a day. There is everything that's happened today. That was your pre-news easy trend trade. There was one right there. Ollie, you made money right there with momentum and path. If that's the best you did today, $500-600, guys, you're on your way to an awful lot of money every year. You don't have to be in every move. Demand that you're in the best moves. All right, now I'm going to take that break I talked about, guys. I'll be back. I'm through all the pictures that have been posted in the room. Good morning, Miss Cindy. Sorry I missed that. I want you guys, tell me what you want to talk about. We'll keep doing the live chart reads. We'll keep looking for our rules to be met. Give me a topic, guys. I'll see you in 5. Let's get back to it. Just for grins. 2 triggers through, 2 triggers not. Divergence prints, blows through 1, 2, 3 areas. That might have gotten some of you. Some of you might still be in. It's divergence on the potential to break once again. My rules not met. If it goes down, just wasn't my money. Odds favorable momentum. 1, 2, 3 triggers through. If divergence prints, probably not my trade. If divergence does not print, let's go through the entry rules. Price is most likely to retrace somewhere between these triggers and these triggers. Price is most likely to bounce somewhere at the areas within. No matter what I do, my stop goes where the market should not, below the triggers. So this is where you have to make a decision on whether or not you want to enter. Jen, this is what we talked about yesterday. With only the potential, you've got a couple different options for entry. It's your right to pick the one that you want, right? It's you are 100% in control of your entry. You can say, you know what? It's not from a strong bottom. It's not my trade no matter what. You can say, you know what? I will take this trade, but only from the lower area. I will take this trade only with a confirmation bar. But the read is the same. The momentum is there. The potential to break is there, 3 triggers through. Now we're just waiting to see if they actually give a reversal bar. There's your reversal bar. That's where the market is most likely to bounce. And guys, if I'm waiting to see if divergence is true, I'm not going to activate a limit order. I'm going to wait a minute, and we're going to see what happens. Divergence is true. My rules say it's not my trade. Your rules may have a different approach. Does that make sense, everybody? First, it's momentum. Then it's the potential to break. And then you have to make a decision on entry. Does it fit your plan? Can you look at your checklist? And does it fit the rules for the trade? I'll show you my checklist for the room. And you can tell me what you think. All right, we'll put it up top so we can see everything. Can you guys hear me? Just want to make sure. Is the market coming from a strong top or bottom? Was it a termination condition that reversed the market? Guys, give me a Y if you can hear me, please. I feel like I'm talking. Okay, cool. The answer is no. Strong triggers, it's a yes. Smalls outside of the large on the small chart, it's a no. No divergence on the 5-1, it's a no. Guys, I am 3-1 on the nose. And it may go up anyway, but I don't feel like I have the edge that I need. I don't feel like the market is giving me enough to risk my money, and I'm okay not taking this trade. Not everybody has that same feeling, guys. We're all different. Some of you like apple pie. Some of you don't. Some of you like chocolate ice cream. Some of you prefer vanilla. Guys, trading is an individual sport. You've got to do what your plan tells you to do. You've got to follow your path. And the cool thing is we're all going to have different paths. There is your second divergence on the potential to break. I don't know what this market's going to do, but look at the scramble around these Fibonacci areas. Is it okay to let it break? Is it okay to say, hey, let me wait until I have more of an advantage? I feel like it is. This is the NASDAQ. The triggers are down. Price is reached, pink 1-to-1s, and it lines up with a zone. My rules say don't trade directly into a zone. Let it break. The S&P has strong triggers. This one creates a bounce. Now we're trading below it. Guys, I can see that zone. It's okay to let it break. Crude oil, I'll be damned. Look how support held. And price is trading directly in both large and small triggers. We're on the wrong side of the triggers here. Guys, all it is chart reads. TradingView users, can I show you something that is unbelievably telling? Watch these tails. The tails means that price went down and then finished back up. Guys, that is 3 times at this zone that they couldn't get a body below the zone. That's a giant red flag for you. That is a huge indication that this area needs something special to happen for it to break. All the triggers are above it. Those tails really tell a story, guys. We're on the weak side of the smalls. We're above this zone. And all of my triggers are up on the 1 minute. Start big and then refine. Small chart says strong triggers down. Large chart says strong triggers down. We just got a little problem in the way. Should we get below it and look for an opportunity? Seems like a good idea. Now there's 3 divergences in the same price range. So guys, 3 divergences is a termination condition. Once my small and large get below the divergence is broken. The same way once small and large get below fibs are broken. So I need it to push a little bit lower to feel like I've got a clear path. Okay, the 1-to-1s didn't hold. We're at support. Hit the mid band. Don't have momentum. We'll just watch crude oil. Guys, what do you want to talk about? We're just going to see what happens here. We're going to see if our rules kept us from getting all the riches we could ever hope for, or if our rules keep us out of a loser. Have you ever looked at your trades the next day and looked at your losers and wondered why you took the trade? I have. I'll admit it. I'll admit it. Why did I take that trade? If I just would have slowed down and looked at my checklist, if I just would have not traded my opinion, if I just would have. Guys, the idea of simulator is to identify and learn how to eradicate the if I just had done this. I would miss this trade all day long. Wouldn't even hesitate. But what I do may not be what's right for you. If you put John Novak and I in the same room, we would read our charts 100% identical. We would take different trades, or we would see different opportunities. Not because one of us is better than the other. We just have different pain tolerances. Some of you like to take the short to get to the long. Some of you like to take the long to get to the short. Some of you are totally okay putting a little hope on a trade. I know it's not perfect. I'll take the lowest risk entry that I can find, and I'll manage it. And that's what you would be doing right now. If you chose to enter this trade, you would have to say it's not perfect. I'll just manage the hell out of it. And that's your right. All right. I'm going to open up NASDAQ Renko 2. This is one of the places where I feel that like the minute charts are easier to trade, and that's the NASDAQ. The NASDAQ is fast. And Ali Yuabu, I saw your name in here. We're going to go through that lesson that we talked about in the other room this morning. Guys, if you are choosing to trade the NASDAQ on these Renko bar, really on any chart, there's the psychosis that is the NASDAQ, guys. Termination conditions work, right? 2 triggers through, divergence, it works. There's a little concept on entry that's going to pay dividends for you guys. And Ollie, this is a great example of it. And let me pull this back. If you're looking to take this short, guys, on the NASDAQ, and this is such a good example, one of the things you can do is, let's go through the reversal bar and everything. At the time of the reversal bar, there are some options. The mid band is super low, and the triggers are coming up. You can gauge on these small triggers where they are in relationship to the areas. If these are a full bar away, taking the entry at the area makes sense. You have time to pull back and reach that area. Once those triggers start to get close, once they're less than a full bar away, you've got to respect them. If you jump in at the mid band, you're getting run over. If you jump in at this fib, you're getting run over. And and one of the things on the NASDAQ is when these triggers up so strong, that close on the correct side of them, that's what gets you on the good side. That's what makes life so much easier for you. And it's a timing thing. And when you see this mid-band, those were probably a bar away. But this is one of the things that, guys, the NASDAQ is a different animal. And if you are brand new, it probably moves too fast for you to keep up with your rules. So you always start with momentum and path. And this is a good example too. So if you were thinking, I'm going to break my rule and go long at the mid-band, small trigger said don't. There's your close on the correct side, and it gives you a fighting chance. And that's just a little NASDAQ thing, guys. So did that make sense, Ali Yuabu? Am I saying that right? Ali Abu? Tried to say it right. If you fight these triggers, you're likely to take a butt kicking, guys. And this is one of the cool things. Ali is fine. Okay, thank you. And this is one of those things that it's a basic truth. It's both of you. I've got 2 Ollies in the room now. It's a basic truth. As long as I'm left of these small triggers, guys, it's going down. I don't care if it's a big chart or a small chart. It's going down. Once I close on the other side of them, there's my advantage. So Ollie Hader, if you're taking that just jump in trade, that's a beautiful look to exit. That's where your advantage is gone. Same thing is true about going up. As long as I'm left of these triggers, it's going up. Once I get a close on the other side, that's when I have a fighting chance going down. And on the NASDAQ, because your entry chart is the same size as your large chart on any other market, these triggers carry a lot more weight. So that's a good lesson. I blew out about 15 accounts learning that lesson. True story. Man, it's still not going up. Crazy. Steve Diego, let's see what you're doing. Whoops. Ultimate hopium trade. So everything says down. You take the first trade, and then you re-enter against 3 divergences. And yeah, that was a hopium trade. So let's read what you read. Ultimate hopium trade, also called no rules trading, no logic trading, a ridiculous stop emotional trading. How an excellent illustration of how to destroy an account. Steve Diego, I can't thank you enough. I can't thank you enough for posting this in the room. There's a lot of us that hate to admit that we rely on hope sometimes, and sometimes you do. Your large chart was a pretty good look, and that first entry, Steve, was pretty awesome, right? And it was an opportunity to get paid and get out when the third divergence printed, and that's where it all went sideways, and that's where hope went in. Termination condition, and there's a re-entry directly into it. And then to hold and to hope. And right here, Steve Diego said, whew, dodge that bullet. Thank goodness. And then they came right back up and got them all out. And it's a great after the fact chart read. And guys, this is one of the things you have to do. When you come back and you look at your charts, Steve has to talk to himself about the three divergences. He has to identify that he was holding, that it wasn't right, that it was aggressive, that it was difficult. And what happens is this conversation that he has with himself after the trade, the conversation that he has with me in the room after the trade, next time he sees this, he's just a little more aware and a little more focused. Good stuff, Steve. And it's still pushing down. I love rules. Let's see what's going on this one. And then Steve says, well, just because I make a mistake once doesn't mean that I'm a bad trader, doesn't mean I'm a bad person, doesn't mean that I'm not capable. And then with momentum and path, pull back to the mid-band inside of triggers, and it's easy money. Steve, great recovery. Awesome recovery. Ladies and gentlemen, the next trade is coming. And this one was almost an hour away. And worth the wait. Nicely done, Steve. And then momentum and path. There's your entry. There's two divergences. You re-enter. And all four off at trouble. And Steve, I know you're not running synthetics on your large chart, but you had to look at this. It's 65. This was certainly a 50-50 trade. Nicely job. Uh-oh, that's okay, Ollie. We'll get you there. I'm not sure. Is it capture? Are you using TechSmith capture? So I know they're discontinuing capture, Ollie. But if I remember right, they were offering to anyone that had that capture license, they were offering Snagit for free for a time. And I don't know if it was a couple months or a year. But to get you guys on it, I would check into it. I've been using Snagit for years, and it's amazing. And I believe it is all of $35, $39 a year. Yeah, $39 a year. So worth every penny, in my opinion. But my opinion's exactly the pennies that you gave for it, right? Not worth anything. But that's my thoughts on it. It's worth the purchase. Steve, great trade. Great management. And then the final one, great management. You know it's not perfect. You take the entry. And then you hold to the next entry, and then you exit at trouble because everything is changing. And then third divergence kills that trade once again. 50-50 trades with divergence, guys. There's a lot of hope going into those trades. A lot of hope going into those trades. Miss Jim, weak bottom, odds favorable, no clear path. You say, screw it. I'm going to get in anyway. And it works. And it works. You're in control of the entries, ladies and gentlemen. Jen has every indicator up and chose to trade directly into resistance with every trigger below it from a weak bottom. It's your entry. And you did nice things with it. Great job, Jen. Does it fit your plan? That's what I would ask. Does it fit your plan? If it does, great. It didn't at all. Because you're bored. That's fair. And guys, when I know your trading plans, I'll hold you accountable to them a little bit. I'll say, hey, Jen, does that fit your plan? All right. Pablo, large chart showing momentum down. I agree. You let the price bars, let's see. Looks like you took one short to the area and get paid. And then you take the next short directly into the area, Pablo. Was that the oh man, I sure hope it doesn't go without me? And then let me show you something pretty cool. I do like the stop, right? See how it ricochets in here? Bing, bang, bing, bang, bing, bang, boom. That's the sound that it makes. Look at this one. When it gets below it, it pulls right back to that HVA line, right to those one-to-ones, right to everything. And that's the one that carries down a little bit. And then it pulls right back to them again, closes below the small triggers, and awesomeness. Sitting through the shenanigans, man. Sitting through the shenanigans. But the large chart led the way. It's nice. You guys will get better and better with sitting through the shenanigans. But nicely done. And if you exited at the outer bands, right, there's another entry to get back to the outer bands, another entry to get back to the outer bands, and that diversion's low. Nice trading, Pablo. You're finding your groove, man. Finding your groove. All right. Has it still not just rocketed off to space? That's weird. The only thing I'm in control of is whether or not I enter the market. My rules said don't. Some of you have entered and exited this trade twice, hoping it goes up. There's no doubt in my mind. Some of you have entered and exited this trade twice. Say, I'll wait for confirmation, and then it hit my stop. And I'll wait for confirmation, and right about now, you're soiling yourself as it runs towards your stop. Trading doesn't have to be difficult, guys. Just not any areas to trade from. All right, NASDAQ has momentum directly into one-to-ones, directly into a zone, maybe a little pump the brakes moment. Wait for a better look. Directly into support with momentum. I see it here too. Maybe a pump the brakes moment. Wait for it to break or wait for it to roll. Right at support, right in the zone. All the triggers there. There's those tails again, right? Tried to push, couldn't. Tried to push, couldn't. Tried to push, tried to push, tried to push, tried to push. Now the small triggers are going up. At least get on the good side of those triggers, right? Instead of hoping from the wrong side. If you're going to try to trade into areas before you clear them, fighting those triggers isn't your best bet. Just saying. Isn't that cool? Guys, if you slow it down a little bit, talk about what's good and bad. There's 3 seconds left. 1 second left, and it's another one of those tails that couldn't get below the zone. Another one of those tails that couldn't get below the zone. Man. Fib reached, divergence, 3 triggers through, Another divergence. Large triggers rolling. Potential for divergence. What is that? That's NASDAQ. Man, these guys are nuts. Termination condition worked. Look how strong those small triggers are. And once you get to the other side of them, off it goes. Crude oil is still dancing right at the fib. All right, ladies and gentlemen, what would you like to talk about? What can I do for you? You got into that crude trade from the blue fib and the synthetic, but got out break even, no strong bottom, odds favorable, no terminations, not a strong entry, got out early. Right on. So you've got momentum all day long, right? The one thing that you have to recognize on this trade, Ollie, is I've got small triggers through. That's good. But my large triggers haven't made it yet. It's this area is not broken. So while you say there's no termination conditions up here, we still haven't gotten through the problem here. Does that make sense? So if we go back to basics, I have momentum. Okay. I don't have a clear path, so you do have a good look. So if the fib's not showing up on your chart, Ollie, but it's showing up here, you're not showing your synthetic fibs on your large chart, and you're taking away that advantage. You can define an entry area. It already tried and failed once. And now there's odds favorable momentum down. This is one of those looks, guys, where you can say, it looks like it wants to go up. Let me force this chart to roll. Let me force this chart to change. Let me get triggers and aim the right direction. Until then, I'm cool doing nothing. Right-click on your chart, Ollie. Go to Data Series. Make sure Tick Replay is in. That's what brings over the synthetics. If that's not on there, it's not going to print your synthetics, which is okay if you're trying to conserve resources. But anytime you see a fib on your entry chart, just know that it should be on your large chart. So you can use a little mental, okay, I'm not technically through yet because I can see the fib here. Does that make sense? I know that you were concerned about using up resources. So you could even just use a drawing tool if you wanted to and just pop a horizontal line right there and say, okay, I know I have a fib. And it doesn't matter what color it is. This is one of the things people don't realize either. Is if I make it so thick that you can't see the color of the fib, all you have to do is count triggers. There's 3 triggers through, 1 trigger's not. It won't be a clear path until all 4 get through. Which means that anything that I do over here is not high probability. It's medium probability. I'll have to manage it a little more assertively. I'll have to lean on the other advantages. Weak triggers is a disadvantage for trying to break the area. Divergence is a disadvantage for trying to break the area. A second divergence would be an even higher disadvantage trying to break the area. Does that make sense, everybody? I'm breaking it down. Everything starts with momentum, and momentum it's the golden child. But momentum isn't everything. Momentum, strong triggers, that's my picture. But without a clear path, even the mountains are going to stop this truck. Gotta be solid on that. Because this could happen. And this is where we're at on that crude oil trade right now. I'm not through that area. It's not a clear path yet. Man, and now they're pushing down. They're at the devil's number. Does that make sense, guys? Did you realize that everything you do could go back to momentum and path and then just finding an entry? All the other charts have tick replay except for the 13.2. Did it not? Does it not even have the option? All right, hold on. But the other ones do. That's weird. Tools, database management. Is this the one? That's not it. Hold on. Tools, options, market data, show tick replay. Make sure that that's checked. But your other charts do. Just for grins, go tools, options, market data. Make sure that that's checked. That's weird that it wouldn't on just one chart. It is? Yeah, I would rebuild the chart for sure. That's odd. I've never seen that. Boom, boom. All right, guys. If you entered the market here at the mid-band above the fib, you have been suffering for approximately 20 minutes, 25 minutes. I'm rooting for you guys. Jason fixed it for you in 2 minutes. Awesome, Estefania. He's amazing, isn't he? The only things Jason can't fix are the things that aren't broken. I use Jason, guys. I'm not a tech guy. I am not a tech guy. So I use Jason. I use John Novak. I like the way you did that. Didn't break. 3 divergences. And guys, look what the market did. How many times are you going to trade in determination conditions? Hoping it doesn't. Momentum. All the triggers through. Ollie. Small triggers are above the reversal bar marker. That was your go with the area if you're going to go sign, because it gives you time to manage. Doesn't guarantee a winner because we don't have a clear path. Well, we're kind of there. Should we wait for the close on the other side? Guys, this is NASDAQ. NASDAQ's a different animal. But that's what I'm looking for, Ollie. That's what we talked about yesterday. Not Ollie Hater, other Ollie. Ollie 2. And now, check it out. They're not a full bar away. So if I was going to take a shot on this one, I want to see a close on the other side. Not a reversal bar, but an actual close on the other side of those small triggers. Does that make sense? Well, and you got it. So now you can get in, right? And now you can put your stop below it. Doesn't guarantee a winner, but at least what it does is it keeps me from fighting those triggers. And guys, NASDAQ's pretty crazy. Second divergence is a bad sign, but your stop is already established. And now those triggers are coming down again, and it's not a clear path. And 2 divergences. We're just going to commit to it. If it closes above, we have a fighting chance. If it closes back below, probably going to push lower. But that's a pretty good example of it. It gives you a place to put your stop, gets you on the better side of the triggers, but the conditions aren't great. But do you see how that patience? Oh, and I've got a trailing stop. Let's see how far it runs. I forgot that I had an automated stop on this one. Ollie, does that make sense? It forces a little patience, but it sure makes it easy, doesn't it? And now there's nothing in the way in momentum. How far is this thing going to run? Hell, I don't know. Yep, Steve Diego, I had this morning. Delete all of these. I'll show you exactly what I had to do. I had to go through my list, Steve, and I had to delete each indicator. And then I went to indicators, invite only, and I just put them back on. And it fixed everything, but I had to do that for all of my workspaces. And I don't know why I had to do it, but I did. Guys, we're still going. So Ollie, there's today's lesson. Don't fight the small triggers, because once you get to the right side, life is easy. When the large chart says there's absolutely nothing in the way, it's more likely to go up. We're beginning to lose momentum here. Do you see it? It was strong, and now it's getting weak. And this is just a trailing stop. We'll see what happens. The large chart says it wants the fib. There may be some small chart fluctuations, but we'll force it to take us out of this trade, guys. We had 4 triggers through, divergence didn't phase us, pull back to the mid-band inside of triggers, little different stop, a little later than the mid-band. And guys, absolutely no reason to exit this trade yet. Where the market shouldn't go, Ollie. I know it's a stupid cliche. NASDAQ, I'm usually 7 or 8 ticks below the triggers unless I get in with confirmation, and then I'm below the reversal bar that gets me in. Does that make sense? So if it's a trend trade, my initial stop is where the market shouldn't go, down below those triggers. If I get in on a reversal bar, well, then I have a place to put my stop. And guys, look at the recipe. Momentum, path, pull back to an area inside of triggers. And this is just a trailing stop. But the worst I can do is 8 points on that, which is $160. So that was an easy $300. Not so bad. And now I have weakness, right? And my areas are on the wrong side of the triggers. The recipe's not met. And look what the market's doing. It's freaking amazing, ladies and gentlemen. So your job is to catch that one and avoid that one. Any questions? This is where I drop the mic. And now price reaches these areas. The large triggers are a full bar away. Let's see if they want to close the gap and return to those large triggers the way they often do. Not jumping in arbitrarily, right? Look at these small triggers screaming. Just screaming down against it. Let's see what happens when we get a close on the wrong side of those triggers at all of these areas with the large triggers a full bar away. We'll just watch it. I don't have any rules met, so I'm not allowed to pull the trigger, but there's your close on the correct side of the triggers. Absolutely no shorts. Price is likely to close the gap back to these large triggers. Let's see what happens. It fights a lot, but we're just going to play for grins. I can't go short. My rules aren't met. I don't have any rules met for long. Now we're just looking to see what a pattern does. You fix it, Ollie? Nice. Patterns are everything, guys. Can't find a rule met. Odds favorable, momentum down, right? Strong triggers down. Knowing your pattern's only one part of it. Not fighting these triggers creates an advantage. And that is why I don't break rules. Did you see how fast that happened? Crazy fast. Too fast to trade. That's how the NASDAQ is for most of us. Too fast to trade. Ladies and gentlemen, your crude oil failed. Does anybody not understand what went wrong on this trade? And Ollie Y, do you see how having that fib there changes the whole idea behind this trade? It really does make a difference, guys. Is the momentum there? What does my path say? Do I have the advantages I need to enter? And guys, that is an avoidable loser. Where did that NASDAQ long stop? Right at a VWAP, right at a zone, right at a midband, and it bounced off of a zone. You top step guys go into top step X. John couldn't get Nexgen symbols, indicators on it. So for me, it's not an option. Whoops. When everything rolls and I have room to the trouble, there it goes, below the fib to the fib, or below the zone to the zone. Miss Cindy, gonna test my eyes. Good top, strong triggers, odds favorable. You've got 3 triggers through, it looks like. Pulls right back to the area. Doesn't go where the market shouldn't go. Easy money. Cindy, you tell your husband, nice job. So one of the things that you'll see a lot is he took the momentum style, which is awesome, and it just turned into the trend trade, which is a great read from him. And notice that when you get to the mid band up here, guys, so Ollie Y, this is for you too. Look at how far away those small triggers are. That's a huge, hey, life is good moment. Letting you know it's more likely to continue down. Really nice trade. Really nice trade. You guys will be floored at how you can begin to take the very basic concepts and add them into the other concepts. To take the very basic looks and turn them into little in-the-moment reads, right? Smalls are down, large are down, everything is down, starting to get momentum, path is clear, I can define areas inside of triggers, and that would be 2 out of 3, wouldn't it? I've got my clear path, I'm at the onset of momentum, and I've got a very clearly defined entry. There's momentum official, clear path, one line inside of triggers, ladies and gentlemen. Does this make sense? This is what we're looking at. First, it's momentum. Haven't reached the divergence low. Everything is below the fib. My entry rules say sell a pullback to an area inside of triggers. And then once again, guys, your large and synthetic are one on top of each other. 2 snakes riding piggyback. If the entry is taken, the stop has to go, whoops, where the market shouldn't. 1, 2, 3, 4 ticks above these trigger lines, because this is where the advantage of entry is no longer present. If you keep asking yourself, do I have momentum? Is my path clear? Do I have momentum? Is my path clear? Guys, if both answers are yes, look for a way in. You guys that like to jump in, a lot of you jumped in right here at about 46 when you got below this divergence low, and you're hoping that we don't lose momentum. If we lose momentum, if we get that reversal bar, with this look on the large chart, it's more likely to become a trend trade, which means you have to make a choice. Do you hold it and keep your stop where the market shouldn't go? Do you exit and re-enter if it gives you the entry? That's up to you. That's a decision that you have to make. Am I following my rules? Odds favorable momentum, nothing in the way, pull back to an area inside of triggers. Do you guys see how I called my shot? Before the reversal bar ever printed, I knew exactly where I wanted to get in. Well, and they blew me up quick, didn't they? Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. If I had time to get my stop in the right spot, guys, that was about a 6-tick loser, not a 16-tick loser. That happens sometimes. I'll take it all day long. Did that make sense? Does it make anybody feel better that I just took a loser in front of everybody? But watch this. Why don't I worry about it? Why am I not sad about it? Because the recipe was there. And there's a lot of people that come to this room, they're like, oh, Nexgen must be full of shit. He just lost a trade. Everybody loses trades. You got to lose the right trades. We're not in control of the market. The only thing we're in control of is whether or not we have those advantages. S&P, mid-band, large triggers a full bar away, and look what it did. It closed the gap back to the large triggers. That's a predictable pattern. No reason to go long here. No reason to go short here. And now we're moving back up. We've got odds favorable momentum. We've got 2 or 3 triggers through. We could define an entry if we get a pullback, going through the same thing. Rinse and repeat. Someone said that yesterday. Rinse and repeat. Rinse and repeat. Steve Diego, did you get it squared away over here? There's that spike that we saw. And look where it happened. Right off of that stupid zone. Jen, that's what you were talking about. How sometimes you can use the 2. Absolutely no shorts, right? It says no shorts. How many shorts can you try to take when it says don't do it? Same thing, guys. Same thing. If you're sitting at home and you're like, oh, he makes this look easy. Guys, I make it look easy because I have filled out this spreadsheet. I know exactly what I'm looking for. Like there's zero hesitation in my life. If I can't say my rules are met, I've got strong triggers, 3 triggers through, no divergence, there's my entry. Boom. That's it. That's how long it takes. You'll get to the point to where you'll say, if I have to think about a trade for more than 5 or 6 seconds, it's just not my trade. It's not what I want. It's not good. Guys, this was the greatest look ever. I would take this every time. Just didn't work. The people in charge had different ideas. That's all. That's all that was. It wasn't a misread. It wasn't a mistake. It wasn't an accident. It wasn't breaking rules. It was the people that control the market deciding they weren't ready to go down. But more often than not, they do decide to go down with this look. So, and now we go through it. What do I see? Do I have momentum? Well, my small triggers are on the wrong side of my large triggers. I don't have momentum. Do I have a clear path? Well, no, my triggers are right there. I've got 1 trigger line above resistance. I don't have any momentum down. I don't have any momentum up. I don't have a clear path. I'm dancing right at this dumb fib. What am I going to do? I'm going to walk around the block with my dog. Toast a bagel. Work on my grip on my golf clubs here in my office, right? I'm going to do anything other than form an opinion that costs me money. All right, this is where I mute you guys. I'm going to end